Good day, students. You're welcome to LODS lecture series. I'll be taking you through a quick tour on SS1 Intermediate Accounting 2. This video is for study session 1, Introduction to Intermediate Accounting. Do enjoy yourself as you go through this video. Introduction. Intermediate Accounting is a course of study in financial accounting. The field of accounting is often thought of as a set of complex business rules. Accounting at its heart is actually a set of very simple concepts and principles. Once you understand the basis of accounting, you'll be able to grab just about any business or accounting concept. Outline of study session 1. On completion of this study session, you should be able to explain the concept of intermediate accounting. You should be able to enumerate and discuss the application of intermediate accounting. And lastly, you should be able to understand the application of generally accepted accounting principles and the actions of FASB. Concept of intermediate accounting. As introduced above, intermediate accounting is a course of study in financial accounting. One might think that intermediate accounting could apply to beyond basic techniques in managerial accounting or any other area of accounting. But in fact, it is applied exclusively to the courses in financial accounting area. Intermediate accounting is primarily concerned with assets, liability, and equities. The purpose is to describe how accounting for this transaction is usually done, or in some cases, what are options in prevailing practice, and to give adequate preparation to accountant for treatment of most usual cases. Applications of intermediate accounting. Intermediate accounting delves into more complex, more challenging aspects of accounting practice and principles. It covers the following areas. We have the time value of money. We have accounting inventory, which is explained by IAS2, that is International Accounting Standard. Then we have accounting for property, plant, and equipment, IAS16. Then we have research and development expenses, that is IAS 38, intangible assets. And lastly, we have accounting for income taxes. Application of generally accepted accounting principles, GAAP. GAAP provide reporting companies, investors, lenders, and others with a framework that covers both the general principles and specific practice. In many areas of legal practice, from mergers and acquisition to litigation, knowing the basics of accounting or financial reporting allow the users to ask intelligent questions and understand where crucial pitfalls may lie. GAAP is the standard framework of guidelines for financial reporting. Compared to International Financial Reporting Standard (IFRS), US GAAP includes the standard conventions and rules accountants follow in recording and summarizing transactions and in the preparation of financial statements. Some observers have called GAAP a six-lane highway where all lanes are legal but not the same. In essence, GAAP accommodates some variation in applied accounting methods as long as the method generally adhere to this set of principles. In theory, adherence to GAAP allows investors and other users to make informed decisions about the financial condition of a company. Third parties who must rely on financial statements have a right to be confident that the data are free from bias and inconsistencies, whether deliberate or not. This requires credible information, full and fair disclosure, and consistency and comparability between entities. It also requires regular revisiting the underlying principles, their use or misuse in the world of financial reporting, and whether the principles require more structure. For the last 36 years, the Financial Accounting Standard Board, FASB, has been the design quasi-public organization for establishing standards of financial accounting. The Securities and Exchange Commission (SEC) officially recognizes FASB rules as authoritative, although the SEC has statutory authority to establish financial accounting and reporting standards for publicly held companies under the Securities Exchange Act of 1934. We have come to the end of these study sessions. Hope to see you next class for another study sessions. Thank you for listening. Bye.